Welcome everybody to our session with Krishak and Learn to Trade. But what I love about coming on these sessions, I know we don't always have a huge audience, but the audience we have, you will benefit from learning from an individual who has a skill set that is one of a kind. I have taken sessions personally from Krishak. Don't get fooled by looking at him thinking he's young, because he is, but he has a knowledge, he has experience, he has exposure, and also he has a skill set of teaching complex skills in the most simplistic way. Now, I know many of us are part of QBN, and if we are benefiting from our strategies, but it's always good to have fundamental knowledge about how and what is happening to your existing asset and portfolio right now. And that's what I have learned, I think, over the last nearly 6 months now. I think we started sort of in January. The knowledge and understanding around the markets, just generally understanding the impact that the fundamentals can have on the technicals when you're trading and so forth, and actually putting what I had in terms of no knowledge into some knowledge into practice. And my session today was looking at selling. So it's really advantageous to learn and understand. And Krishak is the best person in my experience to do that. So without further ado, I'm going to take myself off and let you take and steal the space and the show.
Thank you so much, Shazia, again. It's lovely seeing everyone again. It's been, I think, nearly around about 2 to 3 weeks since we are back on these quick sessions.
Yeah, I think
Uh,
we had a break in between and we didn't want to we wanted to keep the continuation of the four. And then last week we wanted to give enough marketing time to put it out. So, and also I think people need to miss it a little bit to come back as well. It's always helpful, isn't it?
Absolutely. Happy to see everybody again back on the call. Let me share my screen so we can straight dive into the session. We're going to discuss something about, again, I know it's been quite some time, but we're going to discuss something more into technicals, more into fundamentals this time because we've been discussing a lot about technicals and how technicals usually work. A lot of people usually emphasize a lot on technicals. They say that technical analysis is everything. Well, to some extent it is true, but to some extent it is not as well because people neglect macroeconomics, right? And this is the topic for the day is macroeconomics. Now, macroeconomics is a very, very, very important part of trading. That means anybody who's a trader first needs to understand what the macroeconomics are, what to exactly look for when somebody's trading. Do they really look at the news? Do they look at, fundamentals? Do they look at technicals? Do they focus on psychology? Um, if anybody who's a trader here, and I assume anybody who is in Doom is definitely a trader, anybody who's a trader, can somebody tell me what they usually focus on when they place positions? Again, I think the chat is open.
I've opened it so that anybody can put questions into the chat.
Love to know your opinion. What do you exactly look for when you're trading? And then let's take it from there.
And even if you're here for the first time, like Carlo, it would be good to know, um, you know, your ambition, if you like, or what you'd like to get out of these sessions. I know, Abrar, you come again. I think you trade. Francie, welcome to you as well. Some names I recognize because the cameras are on, some I don't. But it's good to know what would you like to gain as well, because we want to tailor these sessions to meet your purpose too. So like Krishak said, macroeconomics is fundamental. Because if you don't have the fundamentals, you're not building your knowledge on something strong and sturdy. But why? Like, for example, why did I want to learn? I just like to know how things work. Whether I use it or not is something else. But if I know how it works, I can talk about it. It helps me, Carlo, get people in as well, because you kind of show the knowledge that you have from being part of an organization. So there's so many advantages
True.
of learning.
Saeed Abrar says he draws on liquidity and BOS, which is break of structure. Saeed Abrar, do you also focus on fundamentals, which is looking at the news, looking at, what's happening around the world? Do you take advantage of fundamentals when you're trading, or are you more of a technical person, like a complete technical person? You're more of a complete technical person. Okay. I'm not sure if he can unmute or if you would like to unmute.
You should be able to because I haven't enforced.
Can you guys hear me?
Yeah, you can.
Yeah.
Yeah, so before starting my day for trading, I always check for the news, for the upcoming news. If there are a lot of news on that day, I don't trade at all. And I make my bias depending upon the news and the economics that are being affected by the wars like these days. So I try to make my bias in the trading of that day based on the news that are going to come.
That's a very good approach. When you have your bias for the day that is including technicals plus fundamentals, you are looking to, trade the best of the possibilities and the opportunities in the markets. So having a bias for the day is very important because we all know that whoever trades the markets, we all know that the bias keeps changing every day depending on the fundamentals, depending on what's happening around the world, right? So the bias does change. Carlos says, I used to day trade stocks. It's exciting. Technicals is not enough. You're correct. Fundamentals is also not enough. That is why we need a balance of technicals, fundamentals, and psychology. There are a lot of factors we usually look at, and I'm in the markets for the past 7 to 8 years, and this is what I do full time. And when I look at the charts, my first and foremost is not looking at the technical analysis, but seeing what is happening around the world, looking at what's happening in the States, what's happening with the current geopolitical issues. Is that something that we have to pay attention to right now? Of course, yes, because the geopolitical issues are slowly rising. We always have this news of ceasefire, but we don't really see a ceasefire. And of course, the looking at it right now, things are quite heated up. So it's always first and foremost is to look at fundamentals and understand your bias for the day. So fundamental is as important as technicals as well, because fundamentals will usually tell you why are the markets moving. Fundamentals will always give you the why. The why will come from the fundamentals. And when you know the why, trading becomes a lot more easier. For example, when you do a particular thing, when somebody is at the gym or somebody is doing some particular activity, they always have a why. Why do people go to the gym? To be healthy, right? To be active. So you should always have a why. And the why in trading and in finance will come from the fundamentals. So the first and foremost is to look at fundamentals and see what is happening in the world. And as Saeed Abrar said, he likes to create his bias for the day, which technically comes from the fundamentals. And then when we move to the technicals, technicals is when to enter and how to enter. So technicals is for your timing. Technical analysis, reading the chart is timing the markets. When you time the market, when you time the market, you have to be very precise on entries. Now, trading is more about being precise on entries, not about the price. Price is more an investment that you always want to buy it. You always want to get in at a lower price and then keep compounding. So trading is more or less about timing the markets. So leave the price alone. Leave the price alone. Look at the time. Look at what the fundamentals, what the technicals are saying. When technicals and fundamentals are aligned, you have a higher probability for your setup to play out. And then the last pillar for finance is psychology. Psychology is how to survive. When you really understand how to survive in the markets, psychology is more of mind game, right? You have to be very careful on what you trade, how you trade, what exactly do you look for. So psychology is training your mind to say that, hey, I'm not going to be over trading. I will not be over risking. Why 90% of the people fail is because of psychology. They really don't know how to survive in the markets because they are not willing to accept the loss. Trading is a business. When we look at trading, it is more of taking the loss, accepting the loss, and then moving on to the next trade. Never hold your ego or never hold your grudges against a particular position. Move on to the next trade, look for the next position because there are n number of opportunities in the markets. Never marry a trade is what I always say. Never marry a trade. Let go, move on, look for the next best opportunity because markets are filled with opportunities. It's on you how well do you see it? That is by combining all these three pillars, fundamentals, technicals, and psychology. Right. Let's look at the fundamentals. I assume a lot of people must be trading commodities, which is gold, oil, with the ongoing geopolitics. Anybody who's trading gold as well as oil, or even somebody who's looking for the dollar, today's focus is going to be these three assets: gold, oil, and the dollar. Now, what usually happens with the geopolitics right now is we all know what's happening around the world, but how can you take advantage of this, of the market, is that you first understand supply and demand of oil. Why do we first understand the supply and demand of oil? Is because whatever is happening right now is happening in the Middle East, in the Gulf region. Gulf region, the Middle East is very known for its oil and gas. Trump has recently announced that he would like to take over the Kurg Island in Iran, which is the hub for Iranian oil. This is why you see oil goes up. Demand for oil goes up. Demand for oil goes up. That means oil goes up. Dollar goes up with oil as well. If oil goes up, dollar goes up. Please make a note. If oil goes up, dollar goes up. This is a positive correlation. It's called a positive correlation. Whereas on the other hand, if dollar is up, gold is down. Now there is an inverse correlation. If the dollar goes up, gold goes down. There is an inverse correlation with the dollar and against gold. So whenever you look at anybody who's trading the markets, currently the dollar is very, very bullish because of the demand for oil, because there's a lot of demand for oil coming in, and this is why we see that the oil prices and even the dollar is going up in value. And if they really want to look at the fundamentals, the best website to look at is Forex Factory. One of the best website to look at the fundamentals is to, understand what's happening around the world. Uh, this in terms will give you a better understanding and a better idea of what to look for, how to set your bias, and your trades can be then placed accordingly. So Forex Factory is one of the best tools to look at news. Please add this, and the other one would be FX Street. FX Street is also for news. I personally like to use the Forex Factory because it does have a lot of factors. For example, let me share my other screen with you. I would like to share Forex Factory with you, and I'm gonna share that with you. For example, share Forex Factory. All right. Do you all see Forex Factory? Okay. This is Forex Factory, right? Now, what I usually like to look at Forex Factory, since this is more into the macroeconomics side of the picture, I usually like to see what President Trump is saying, right? This means the US will be hitting Iran very hard tonight. We assume total control of their oil. This means the demand for oil is going to increase, and this will set the oil prices even higher and higher and higher, and that will dump gold. This is the correlation. The correlation of oil is not with gold. The correlation of gold is with the dollar, not with oil. It's just that if oil goes up, dollar goes up. If dollar goes up, oil goes down. So there is no correlation between oil and gold because both of them are assets. Both of them are commodities. One is liquid, one is a liquid asset, one is liquid and metals. as gold, right? When you melt gold, it becomes a liquid asset. So both of them are assets. It's more of understanding the relation with the dollar. Both of them have its own pros and cons. I like to personally trade gold against the dollar. Again, for long term, I'm heavily bullish on gold, but just in certain times, we are all here to make money in the markets. Irrespective of what the direction of the market is, you could start short selling because gold is going down, so you can benefit from that. As traders, whether the market goes up or down, you can make money either which ways, whether the market goes up, whether the market goes down. You are here to make money. You're not here to say, hey, no, I'm not going to start short selling because that goes against my principle. Your principle will also be intact if you follow the trend, which is the bias for the day, right? And the bias for the day, again, always is set by looking at Forex Factory or any fundamental news. If somebody would like to look at Bloomberg, somebody would like to look at Yahoo Finance, anything that is in your site or anything that you're more comfortable with, look at it, but make sure that you look at fundamentals because fundamentals is very important. And then we have the US fundamentals as well, like PPI, Producer Price Index. CPI, yesterday we had CPI, Consumer Price Index. CPI went up, inflation went up. If inflation goes up, what happens? The value of the dollar increases. The value of the dollar increases, gold goes down. So you see in the most recent times how everything is in favor for the dollar and against gold. People say, hey, gold is safe haven. Gold can never go down in value. Of course, gold can go down in value, but can it completely crash? No. It is taking a breather. So if you look at the charts for gold, I'm going to go back to my screen again on trading, and we're going to go back to charts. If you look at gold right now, okay, if you look at gold right now, I'm going to open gold on the other screen. Okay, if you look at gold right now, historically, gold has just been pushing up. Historically, gold has just been going up and up and up. So is gold a really good investment? 100%. It's just that in current situation and scenario, gold is not favorable right now. That does not mean we stop buying gold. That does not mean gold is not a valuable asset anymore, right? After such a, nobody was really talking about it when gold went up. Everybody, they were very happy, hey, we are making money on gold. But when gold takes a breather, what happens? People are very fearful now. They say, hey, gold is crashing. Gold is not crashing. Gold is taking a breather for it to continue another rally up. And how do I know this? You can also know it. How do I know this? By looking at the fundamentals, by looking at the macroeconomics. 50% of your problem will be solved when you look at the direction of the market. This is in terms of technicals. And that is 50% of your problem is the direction. The rest 50% is your psychology, your entries and exits, your emotions, your fundamentals, what to look for, what not to look for. That is the rest 50%. But 50% alone is if you follow the trend, you will make money. There is a higher possibility. Now, I cannot guarantee for anybody, but there is a higher possibility you will make money. You will lose less, you will gain more. That is when you follow the direction of the market, right? Now, I always go by this rule is trend is your friend until it bends. This is a saying that I always follow. Follow the direction of the market. Follow the trend. Trend will never say, hey, I'm going to go against you. If you're going with the trend, it's more than likely that you will be now making money. You will be now churning out much more profits than you even anticipate because you're going with the direction of the market. When you move with the direction of the wind, you move faster. you move faster. But when you go against, you need more energy, you need more force. It's the same thing. If you go against the trend, you will start over trading, you will start over risking, you will fight the trend. This will put you in a psychological state of giving up on trading. Trading is very simple. Look at it, look at macroeconomics, look at fundamentals, look at what's happening technically, fix your psychology, fix your mindset, and this is how you're gonna make money trading. You don't need any holy grail strategy. All the strategies work. Anything you pick from YouTube will work. Anything that we learn together will work. Everything is in between you and your psychology, you and the markets. This is how I have become profitable. It's just by fixing my mindset. I follow the same basic rules. Support resistance, looking at the fundamentals. I follow the same rules. I'm not doing anything different from anybody online who's making money. The difference between a profitable trader and a non-profitable trader is the psychology, is the mindset, which is revenge trading, over trading, over risking. That is the difference. Put that all aside and see how your account grows over time, of course. And coming to the last topic, which is called compounding, that is the power of compounding. If you make money, if you make, let's say, $5,000 on an average from trading, you don't need to take everything off. You don't really need to withdraw all the 5,000. Withdraw how much you need and reinvest the rest. That way, you're compounding. As you keep compounding, as you keep reinvesting, your profits are just going to get bigger and better. You're not gonna, it is not, you will not be losing as much. Your profits are just gonna get bigger and better as you keep compounding. Of course, we all like to withdraw stuff. We all like to, withdraw, let's say, 40%, 50% of our profits. But the question is, do you really need 50% of your profits? Do you really need to splurge 50%? Or what you could do is take 50% out, invest 25 and spend 25. And then reinvest the rest 50% back into the markets. That way you compound your account even faster. So you reach your end goal even faster. This is a smart way. This is not gambling, but this is a smarter way to reach your target by the end of the year or, in the next 5 years. You don't really need to, spend 50% of your profits all at once, right? The compounding effect is real. A lot of people also believe in saving. If a lot of people do believe in saving, their investment right now, let's say if somebody has been saving $10,000 for the past 5 years sitting in the bank account, it will now be less than 10,000 because of inflation interest rates. What comes into the picture? Macroeconomics. Macroeconomics comes into the picture. So this is why compounding, that means reinvesting back into your trading account or reinvesting or, buying gold, buying something if you want to buy stocks, if you want to buy something else in terms of assets, you could do that way. You're building your passive income. That way you're building your passive income and money keeps on rolling. So your homework up until we meet next time would be to explore Forex Factory, understand what the platform is, because this is one of the easiest platform to look at. It is not complex. It is one of the easiest platform to look at in terms of fundamentals, easier to understand, and that way you could get ahead of the 90% of the people who lose money. And you could also look at TradingView for, of course, for charting as well. For charting software, TradingView is also good, but first and foremost, go over Forex Factory, go over understanding the fundamentals. I see a question by Saeed. Let's take the question. You can also put filter. Exactly. Would I say, in my personal opinion, what I usually like to do is I put a filter for high impact news. I take off the low impact, and let me show you what I do when I go on Forex Factory. And this is a good point that you touched. Thank you for mentioning this. When you go on Forex Factory, you could edit your settings. you could edit your filter. There's a little filter icon here. You could click here and you could edit all your filters. Now, I have all the currencies on because I like to, again, view the markets, view all the other markets, Australian markets, the Japanese markets, the UK markets. I usually like to see the red folder. The red folder are usually high impact news, right? Which are very, very sensitive, like interest rates, inflation, anything happening around the world. Like when Trump says something, it is a red folder because it is a high impact news. This is what it is. So looking at the fundamentals, make sure you have high impact on. Medium impact is okay. You can turn off the low impact, it's okay. And the gray folder is for bank holidays. It's called non-economic folders. It's for bank holidays. You could keep all this on because if you keep all these events on, you'll be able to understand a lot more in terms of fundamentals. So you can keep all these on. Just take off the yellow folder because it's not needed. And the rest assured, if you feel that you want to keep all these currencies on as well, that's fine. But it'll just add noise. So try to focus on just the US dollar and take everything off. Uh, any doubts, folks? I don't see any doubts. If anybody would like to add something in terms of fundamentals that I've missed, or in terms of technicals, or if they want to share their trading experience, feel free to do so.
Hey, Krishnak. Hi, Shasiya. This is Carlo.
Hi. Hi,
You
Carlo.
know, just like I said earlier, I used to be a day trader of stocks.
Mm-hmm.
I used to play options a lot, and I used to sell it, and I loved it, but it was very exhausting. It's fun when you're winning. You hate yourself when you make so many bad decisions, right? The hardest thing about trading on your own is discipline. There are so many
Sure.
factors to look at: quarterly reports, geopolitical situations, what is the OPEC doing, what is the interest rate situation, is the Fed making an announcement, among other things. I mean, it was so hard for me to do revenge trades a lot. I mean, and that's how I blew a lot of my accounts. But I won a lot once I was able to control myself. The emotion has no room in investment, or in trading. We have to stay with the trend because that is all we can do. I mean, the saying that the whales control the market, there's some truth to it, or maybe it's absolutely true. And as much as I love trading now, I mean, I love it that QBN is doing it for me. Maybe when I'm not trying to build my team anymore with QBN, then I could trade again. But it's peace of mind is better to have than the excitement of trading for now for me. Thanks.
I agreed, Carlo, and thank you for sharing your experience with trading. Trading can at times be super frustrating as well because of a lot of data that we have to look at, especially with options. You were an option seller. That's one of the most difficult things to do as an option buyer. And I was an option buyer back then. I used to sell options as well. But when it comes to options, you have to look at option Greeks, intrinsic value, strike price, bid and ask. Right, you have option Greeks like rho, vega, delta, theta, which is time decay expiration. There are a lot of factors to look at, and option markets move very quickly. Right. So in case it's good that QBN right now is managing a portfolio, and that's really good, but make sure that you also would like to take control of the markets in some way or the other at times of your own portfolio. That is, start small. Start small. Instead of going with options, try to experiment with futures. Try to experiment with futures market. Try to experiment with foreign exchange, with commodities, because I assume that you are really good when it comes to fundamentals, right? Because what you spoke about OPEC, about interest rates, inflation, you know your game. If you know your game, you could also start a smaller account, which is probably $500 to $1,000, and try to compound that over time with leverage. We all get leverage in trading, correct?
Yes.
So with leverage, you could definitely try to compound that account as well.
We were talking earlier today, me and Krishak, was just generally like We have this misconception that you have to exhaust yourself trading. You need to be sitting. I mean, if you're scalping on a short time frame, you are going to be sitting in front of the screen. But there are other ways. It's got to fit your lifestyle rather than you're sitting in front of the screen. Because that's not why people trade, right? They don't trade for it to take over their life. They trade to have a lifestyle. So
Sure.
it can be a side hustle as well, and it can add the couple of extra $100 a month. And we talk about compounding, and if you compound them, that can make a difference. I think what happens is people think about huge numbers right from the beginning, and
Correct.
you got to build yourself. You got to build your skill set. You got to build your confidence to get there. Because if you go into large lot sizes sooner than you're ready, then you're going to have larger losses. Because as we know, trading is high risk, high return. We know that from the aggressive strategy as well. So I think we've got to learn to kind of take baby steps first and then start gradually growing. And many of us end up having a bad experience. And then what happens? Oh, it's not for me. And then we pack it up and move on. And so that's just my experience there. I take baby steps, but I felt very good when I was able to do it. At one point, I thought I would never be able to. And considering the things that I do in terms of my schedule, I don't have time for sitting on the screen all the time. I'd rather put the stop loss in and let it go and work on the overall percentage. If I'm getting 70% success ratio on the trades, that's still pretty good, right? I'd rather let the stop loss play its magic than go in and sit there stressed out, shoulders hunched, and there you go. I lost it. It becomes a game then, and that's where it's truly actually becomes
Correct.
gambling. It's not a strategy anymore.
That is true. And we just got a news right now, 5 minutes ago on Forex Factory that Trump have canceled the scheduled strikes on and bombings against Iran this evening. What happens to gold? Gold goes up, oil goes down, dollar goes down as well. So this is how impactful Forex factories. You then get to choose your direction, right? You know the bias because, and this is a really good example right now that we just got a news right as we are about to end the session. And this is what really works. And I can see right now gold going up. Said says he has automated his process of trading, which is good. Well, everybody is now going towards automation. It can be a bit complex, but that's good. That's amazing that you have automated and you only look at the charts when it's required.
Well, I love the fact that he says that I get an alert and then I hop on quickly, place my trade, and then what do? Close your eyes, go away? Because I'm telling you now, as a trader, it's very hard to what's the word? It's very hard to then not look. You kind of
Detach
want
Yeah,
to
from
look.
his, yeah, sure.
but you really have to use the tools that's available to you. Just like it's good that we have MyQFX and Ashraf's outlook for the week. You know, that helps. But then again, we also have to realize that things change in a heartbeat in trading.
Sure.
So I mean, you really have to be on top of your game, or especially if you're really spending time in trading, because then it becomes your job. It becomes your, you could be as passionate as you want. Just be disciplined to follow the trend. That's all we can do.
So Carla, let me ask you a question. Have you connected your MyQFX to MT5?
No, not yet because of where I'm at. I don't think being in the US allows us to do that, right?
I haven't tried. You got to try to know. I'm in the UK
Okay.
and I don't keep it on all the time. I use a demo, and then in between, when I think, right, I think because you're looking at the patterns and the trends, and then I connect my MT5 and then go, right, now we're going to go real. But I think when we move away from the theory and go into the practical, that's where a lot of people sway the other way, because suddenly whatever they were good at, their emotions have now come into play and they suddenly reverse in terms of their performance. So it's just a good
Yeah,
way of testing yourself. That's all. Even if it's a
yeah.
small
I guess. Yeah, I guess I'll contact you later on because I need more information, and because I do want to start playing with what we have on MyQFX.
I
So
think because in terms of if you look at an ecosystem and the webinars, so we get the knowledge, we connect we will be first familiarized with the platform MyQFX, and that takes a bit of time. Then MT5 is connected through QBN Global, so the brokerage comes in. QMinds, where you get the education from. We empower you anyway. So the whole ecosystem comes together, and I think, well, I'm quite sure I'm at least one person who has pulled it all together in terms of crossed the T's and dotted the I's and have that awareness. But it's taken time. And my advice would be to at least understand because then there's how many customers you might be losing out on because you're not aware of a system. And that might be what they're looking for. Not everybody's looking for the aggressive plus. Some people want to learn. So it's really good to have that oversight of what can help when, who, where. And then that brings everybody in ultimately to, right, let's go to plug and play now. Because some people say, oh, I don't want plug and play. I want to learn how to do it myself. And then later on they decide, right, okay, I'm going to put some into the plug and play as well. That's diversifying their portfolio. But thank you for all your questions. It's always good to make it engaging. Any more questions before we end? I saw a couple of people come in right at the end as well. So just a reminder, it is 6, we've gone over, but a couple of minutes, but it's 6 p.m. on a Thursday, UK time, 6 p.m. So adjust your clocks accordingly. And we've covered the fundamentals today and had an interesting discussion. Francie, I bet you probably put the Spanish translation on, but the calls are translated into Spanish, and then they will be available on YouTube for a replay. Anything else, Krishak, you'd like to add before you close?
I think thank you all for joining. Again, thanks, Carlo. Thanks, Saeed. Thanks, everybody, for your questions and it's more of an interactive session, as I always say. It's not me speaking all the time. I want to know your experience, your understanding of the markets as well, so everybody can pitch in and make this as an interactive session. Your homework would be to, just go over Forex Factory, understand the platform a little bit. This will improve your trading over time, I'm quite assured. And thank you all for joining, and we'll see you next week.
Thank you. Take care. It's good evening
See
from
you.
my side. Take care. See you again next week.
Bye-bye.
Thank you. Bye.